Now let's practice how to capitalize R&D project cost. ABC Corporation incurred the following research and development project costs during the current year. On January 1st, equipment A is purchased for current and the future R&D project that has alternative use. Okay, that can be now the capitalized because that has the future R&D project the uses and that has the alternative use. And number two, January 1st, year one, equipment B is purchased for current R&D project only that has no alternative use. That is now the R&D expense. And legal fees including registration cost to obtain patent for 20 years. Legal cost, registration fee, that should be included in the patent. So $80,000 should be capitalized. And the material cost for a prototype product, that is prototype product, is part of R&D expense. And then salaries also R&D expense. So let's start. And then the equipment, these two equipment has an 8-year useful life and is depreciated using the straight line method. But equipment B, it cannot be the capitalized because that has no alternative use. Only use the current R&D project. So we have to disregard this the useful life 8 years for the equipment B. So let's start. Equipment A purchased for current and the future R&D project. So we put the equipment, let's say just A. Equipment A should be capitalized on the PP&E. So $40,000 and cash out on the credit side, $40,000. And then equipment B is purchased for only current R&D project. Now that is R&D expense, just R&D expense. So we put all this amount, $30,000, the expense file. So cash out. And then the legal fees, including registration costs. Now we include all the costs to protect patent that has already, we have this patent on hand. So it can be capitalized as a part of the patent as a legal fees. Again, when we measure the acquisition cost of PP&E or the intangible asset, we include all the costs before using, or from now on we are using, including this legal fees. That is also the acquisition cost, part of acquisition cost. So patent, the legal cost is $80,000. Then cash and $80,000. Then material costs were paid for a prototype product for $50,000. So the material cost now, prototype is for the prototype product. So that is now R&D expense. So $50,000. And then cash out $50,000. Oh, just material cost. That material cost, as I read, I'm sorry, that is not the 50, that is the 60. So let's change 60. Cash out 60,000. Then salaries for current project are paid to direct labor and indirect labor, that is $50,000. It also only the current project, right? So we cannot capitalize it. So R&D expense. It is R&D expense, $50,000. Cash out. Then adjustment entry for depreciation and amortization. So we found the equipment is capitalized. And then the patent is capitalized. So 1 year later after acquisition, we should record depreciation expense. Depreciation expense for 40,000 divided by how long years? 8 years. So 5,000, and then accumulate depreciation is the same as this 5,000. And then for the patent amortization, we should record amortization expense $4,000. How do you get it? This 4,000, 80,000 divided by 20 years. And then the same way accumulate amortization 4,000, right? Then let's post this journal entry. Here the equipment, now we can put the equipment 40, then the cash out, right? That is first transaction. Let me check the balance first, plus the patent part should be the same as this. Then this retained earnings should be related to this net income. Then this equipment is plus it. Okay, then also patent net is the patent plus minus the accumulate amortization. Okay, then I finished the setup. Now equipment B is purchased for current R&D project only. Okay, that is R&D expense. We have to put the negative 30,000 and then cash out 30,000. Okay, I didn't finish this yet. That is the sum of these three expenses. That is operating expenses. There are operating expenses, R&D expense, depreciation, amortization expenses. Those are the operating expenses. So we matched out. Then number 3, legal fees including registration cost to obtain patent for 20 years. Now legal fees should be put on the patent. Let's just assume that we have had the patent, actual patent on hand. But for the studying purpose, we just focus on these transactions. Also cash, there's no negative cash amount. But we just assume that we have had the cash amount before these transactions. Okay. And then, where did I miss? Okay, and then cash out also $80,000. So we matched out. And then fourth transaction, R&D expense, additional R&D expense, $60,000. Then cash out $60,000. Then transaction number 5, R&D expense one more time for the salary expense for current project. R&D expense, now we put the R&D expense negative 50, and then cash minus 50. Okay, so we match it out. And then finally, adjustment entry at the year end. Depreciation expense $5,000 minus 5,000, and then accumulate depreciation for the equipment 5,000. So we adjust it. And then it's also amortization, accumulate amortization for 1 year, negative 4,000. Then we have the value of the book value of patent is 76,000. Then we should put the amortization expense $4,000. So we matched out total asset and total liability and equity like this. Okay, that's it. See you in the next video clip. Bye bye.